Hi there, very good morning to all our viewers who are joining us live on this broadcast here at Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. Now, we did see markets start the day on a higher note yesterday, but then by the end of trade, it always manages to fizzle out. So, pretty range bound that we've been, and in that consolidation kind of mode, at least in these last few sessions is what we are seeing. But can we manage to, break past that and move up ahead? We did, just shy of getting to those 24,600 levels on the Nifty, but we still just about 38 odd points is what we added in yesterday's trade. The Bank Nifty, though, that one also has seen some bit of swings, and we saw it fall by about 149 points yesterday. So that one also at 50,368 is where the Bank Nifty closed, and it was the private banks that were among your biggest drags in trade, although we saw quite the opposite when it came to your PSU banks, and those were all propped up because of that meeting that was to be held between the finance minister and the PSU bank chiefs, and the outcome of that also was quite interesting because she has given a push for these banks to come up and prop up their deposits. And we've been talking about how there is that little mismatch that we are seeing when it comes to the bank deposit rates compared to where the monies or where the savings are all getting into equity perhaps. But that will be interesting to see whether the Bank Nifty now manages to break past and go to that 51,000 levels, or will it still be in this consolidation mode? We'll get our experts to answer that for us. But before all of that, here are the top headlines. Now, the S&P 500 and Nasdaq both gained for the 8th straight day, their best run in 2024, as stocks continue to recover from that sell-off which was sparked by recession fears. Now, the Treasury yields have held steady ahead of the release of the Federal Reserve's minutes of that last meeting, as well as the Jackson Hole Symposium, where we'll hear Jerome Powell's speech on Friday. Asian markets are trading largely higher as well, tracking those cues from Wall Street. China has gone ahead and announced that it's leaving its 1-year and 5-year loan prime rates unchanged for now. The GIFT Nifty is also suggesting a higher start for Indian equity markets. And crude prices seem to have slumped by over 3% overnight. Brent has slipped to $77 a barrel as the United States pushes for that ceasefire in Gaza, while Chinese demand continues to decline. And shoring up deposits takes center stage at that Finance Minister Nirmala Sitharaman's meeting with public sector bankers. In the first meeting that was held after the government took charge, Finance Minister calls for special drives in order to garner deposits after concerns over the flight of household savings towards riskier assets. Well, so that's the setup that we have. Interesting, quite we could say, but we are still in that range-bound trade, or rather flat trade that we've been seeing all through, a couple of sessions last week. Friday was that good session where we saw that recovery rally really take place, and from there we've been kind of stuck in that range. But below 24,600 is where the Nifty is at, so just about 31 points that it saw yesterday. The Sensex too closing in at about 80,425. But it was the metal stocks that saw a good up move yesterday, rising, and this on the back of all the commodity prices globally that are seeing this uptick, helping the metals. Of course, we saw a lot of traction in that one. But on the flip side, you did see the financials, which were the biggest drag in trade, the likes of an Axis Bank, ICICI, IndusInd, all of them among your top losers yesterday. But when you look at the market breadth overall, we could say it's firmly in favor of the advances, with the advance decline ratio at somewhere at 3:1. So that's a positive there for the bulls. Another positive could be looked at through the option queues, where the Nifty PCR, or the put call ratio, has fallen to about 1.17 versus the 1.31. But that's still above one level, meaning that the bulls are still, there is still that bullish sentiment in the market. In terms of which stocks are in your F&O ban, now a couple of them have been added and a whole host of them continue to remain in that ban, but added today in today's ban list is Balrampur Chini, Birla Soft again, as well as Hindustan Copper, and those that continue to remain there are the likes of Aditya Birla Fashion, Bandhan Bank, Chambal Fertilizers, GNFC. These ones have been there all through last week as well. NMDC, Manappuram Finance, PNB, RBL, SAIL, Sun TV. One that has been removed from the ban today is Biocon. So you're going to see some traction in that one, particularly yesterday there was news flow also for that counter. Now, in terms of where the monies are coming, well, we did see again FIIs turn sellers yesterday. About 2,667 crore worth of equities is what the FIIs sold, whereas the DIIs went on to buy about 1,802.92 crore rupees worth of equities. The India VIX index, that one too is continuing its downtrend, declining just by about 0.61%, but now at 14.32 levels versus the 14.4 level that it was previously. And anyway, with the volatility, as long as it stays below that 15 mark, seems like the bulls should not have too much to worry. But let's get understanding where exactly you should be placing your money in this kind of market, and what are the stocks that are really, shining in trade, or where the spotlight is. And joining me for that is Osho Krishan. He's the senior analyst of technicals and derivative research at Angel One. Good morning, Osho. Always a pleasure to speak with you here at Moneycontrol. Let's get understanding first with between the Nifty and the Bank Nifty. There seems to be days where you're seeing the Bank Nifty have its shine in the sun, we would say, but of late that is not really holding out as well. Do you think we can see this, at least the Bank Nifty, break out from this 50,000 consolidation zone that it is in? And if you're to pick between the indexes, then does the Bank Nifty still have a better chance compared to the Nifty, would you say so?
Very good morning, Stacy. Firstly, thank you for inviting me at your show. Well, now coming to the query on Nifty and Bank Nifty, then definitely Nifty has seen some kind of outperformance in the recent period as compared to Bank Nifty, because Bank Nifty consecutively for the 11th session has been into a consolidation range. So on technical front, the 20-day exponential moving average and 100 exponential moving average is the range in between Bank Nifty is hovering in. But overall, until it crosses the zone of 51,000 on a decisive manner, it is expected that it should consolidate within the range. On the lower end, again, 49,700, 800 is the support. On the higher end, 50,750 to 51,000 is the resistance for Bank Nifty. So until it crosses the resistance zone on the higher end, we expect that it should stay within the consolidation range, and focus should be more into Nifty or towards stock-specific actions. For Nifty specifically, if we will be seeing, there has been two major developments. One, the put writers have shifted their position to 24,500, while on the higher end, 24,600 was the call writing position. But with the opening, strong opening based on the global cues, I am expecting that there can be a short covering that can be seen in today's market, and Nifty has the potential to touch 24,700, 720 odd levels. So not very much aggressive, but again, the potential of moving higher is more in Nifty as compared to Bank Nifty. So that should be the flow for the day, that any dip towards the zone of 24,570 to 600 should be the zone where one should try to accumulate it, and 24,700 is the zone where one should try to book their profits in the benchmark. But again, stock-specific action will be higher in the market.
Right. In fact, talking about stock-specific action now, one that was quite a buzz in past few days of trade. Yesterday, after UBS also gave it an upgrade, Zomato has been quite a buzz. But today, it will be for a different reason, because we are getting to hear from sources that there is likely to be a block deal within this block deal, a window that opens up, and it's going to be Antfin Singapore, which is likely to sell about 2% stake in Zomato via this block deal. Now, the offer size has been increased to about $556 million versus the $408 million that it was earlier placed. Yesterday when this news came out about the block deal, it was somewhere at around 408 million, but now we're getting to understand it's increased to, instead of 1.5 to about 2% stake that they're willing to pair off. And also the floor price for this is priced at 251.68 rupees per share. This roughly around a 4% discount to yesterday's closing price. And remember, Anfin Singapore holds somewhere around 4.3% stake in Zomato as of June 2024. So they are looking to almost half that stake with about a 2% stake sale that they're looking through these block deals. So it will be interesting to see how and when. Yesterday we did see the stock have a good rally, but towards the end of trade it did manage to end quite flat, we could say. So maybe there was this anticipation that there is going to be a block deal. But after this kind of initiation, maybe we can ask Osho also how he's looking at something like Zomato. In fact, if you just look at the stock in the past 1 month, close to about 20% rally that the stock has seen in 1 month alone. But also if you have to check the prices on a year-on-year basis, that too has seen a good up move. It was trading somewhere around just about next to its IPO prices of around 70 to 75, and now it's somewhere around 250 or the floor price for this one coming at 251 rupees. So it'll be interesting to see how it really maneuvers and the kind of reactions it has been getting of late to all of the news flow that is coming in for Zomato particularly, and also with the management commentary all through its earnings as well, where they're focusing on profitability, how the whole Blinkit story has really turned around for the likes of Zomato. But we are just moments now from opening, and we will see exactly, and maybe that's when I'll go back to Osho and ask him particularly on this stock. But let's look at which stocks are really the ones, besides the ones that see news flow, are the ones that are really making the markets, push that momentum for the markets. But there we are at opening bell. We are looking at the Nifty there, 24,600 levels that it's managed to cross at least at opening bell. So that's where it didn't. Yesterday we were looking at that point to be those levels, but we are also hoping, like Osho was pointing out, somewhere around 24,700 or 750 is an important crucial resistance level that we could see for the Nifty. So if we manage to get to that by the end of trade, will be interesting to see. The Bank Nifty also seeing, we could say we've opened up just about flat, but with that positive bias for sure. So 50,449 is where your Bank Nifty is propped up at. The Sensex also seeing some good 200 points of gain. So 80,600 levels is where the Sensex is also at. I can see barely about 8 stocks that are in the negative among the Nifty 50. So you have a good amount of stocks that are in the positive, the likes of Dr. Reddy's or even Reliance. All of them are in the positive at this point. Even M&M, after seeing a lot of pressure in the past few this thing. Today there is in fact a brokerage note also that has come on M&M cutting its target price, but it is interesting to see. Sectorally also pretty much most of them in the positive or have opened up at least in the green, we could say, except for perhaps the financials, which will continue to see some bit of pain, and that depends and see, we have to wait and see which are those stocks that really change the game. But for now, BPCL there on your screens, TCS, IndusInd Bank, all of them among your top gainers in trade. So you have a good mix there. There's also news flow coming in for the likes of an IndusInd Bank, where we will be talking about how they've been given permission to open their mutual fund arm, and that perhaps is a good positive for IndusInd Bank. Brokerages like Nomura also say the same. On the flip side, you're seeing the likes of an ONGC, Bharti Airtel as well as Cipla among your top laggards in trade. So that also will be interesting, and we should talk about oil and gas stocks particularly in a bit with Osho as well. But like I was talking about IndusInd Bank, that one among your positives, among your top gainers, in fact, this after RBI has given its approval to carry the mutual fund business via a new subsidiary altogether. And of course, Nomura has a neutral call on IndusInd Bank, and they've kept the target of about 1,580. They do see this as a positive development, as currently IndusInd Bank does not have any direct or para banking subsidiary business for now. So this will be a good move if they do go on to launch a separate mutual fund business via a new subsidiary. How are you looking at this, Osho? There's good news flow coming in for IndusInd. Yesterday, though, it was the financials which were the big, especially private banks, which were among your top laggards, the likes of an IndusInd Bank also among that list. But today there is news flow that is quite positive for it. How are the charts looking for IndusInd Bank, particularly, especially among the private banking space that has seen, some bit of profit taking, one would say, for the likes of an ICICI Bank or even an Axis Bank, which were among your laggards today. How is IndusInd placed?
See, overall, IndusInd Bank has underperformed from the major private sector banks like Axis and ICICI in the recent period and overall period also, because there has been a very strong consolidation that has been going on in this counter. On the higher end 1550, lower end near about 1350 is the zone where one can expect the stock to take support. So currently it is near about the lower zone of the consolidation band. So I expect that from here onwards there can be some kind of revival, not very much aggressive on this counter for the timing, because technically it is hovering below all its exponential moving average. So I'm expecting that until it crosses the zone of 1420, 1430 odd levels, there can be some kind of consolidation or some kind of sidewise movement that can be seen in this counter. So better to stay sidelines from IndusInd Bank until it crosses the zone of 1420 on the higher end. Technically, it is not looking very lucrative. There are many other companies or counters from the same space which are having better technical placement as compared to IndusInd.
Right. So maybe not IndusInd at this point, because within the private bank space, there could be better counters that you would find opportunities, at least what Osho is suggesting. But another interesting counter will be that of Bajaj Auto. Now, this, just like Maruti yesterday, which came out and said that it is going to be taking a hit in its Q2 bottom line because of this whole change that has happened in the whole LTCG regime. Bajaj Auto too has come out with a filing saying that they will be making provisions of close to 211 crore rupees on their deferred tax. This will be created on the investment income that they get, and this provisions will be due to the withdrawal of that indexation benefit and the change in the tax rate that has happened. Though they say this is just below the materiality threshold as stipulated by the regulations according by the listing. So this one-time impact will be made only in their net profits in the coming quarter, and the impact of this change will relate to only the other income, and pretty much what even Maruti mentioned, that it's not going to take much from their operating performance, but the provision is being made only in the book of accounts at this point, and the actual tax payment will be made when the redemption of these mutual funds happen. But interesting, and I think there are a couple of queries also coming in on the likes of an Bajaj Auto. Pankaj Kajalia wants to know, what your view is on Bajaj Auto, and given this news flow and what we are seeing otherwise within the auto pack, Osho, how does Bajaj Auto really look within the two-wheeler space?
See, overall, technically speaking, then this counter is on a very strong consolidation zone from the last 2 months, expected to have take support near around the zone of 9200, and while on the higher end I am expecting a strong resistance around 10,000 odd levels. So currently it is hovering near to the higher band of the consolidation zone. So one should either wait for fresh position in this counter. If any dip comes towards the zone of 9200, that should be acting as a very strong opportunity to accumulate this counter, or else one should wait for a decisive breakout above the zone of 10,000. Then only we can see some kind of uptrend. For now, there has been very lackluster movement in this counter from the past 2 trading months. So I'm expecting that until it witnesses a decisive breakthrough from the mentioned zone. So until that time, one should stay sidelines. If have position, then stay invested with a stop loss of 92, 92.1.
Right. Let me also get a couple more queries going then, and there are a few coming in. Let me take this one up by Kishore. He wants to know your view on Divyani International. So, how the charts really placed for this. We did see when Jubilant Food came up with its earnings, there was quite a buzz because they did show almost 100% increase in their revenues. So the likes of a Divyani International also on the similar lines, you would say, or are these the QSR space quite competitive, one would say? So how does this one look?
See, overall, this counter has seen a decent traction from the zone of approximately 150, and from there onwards, there has been a decent traction, not very much higher traction in terms of volume, but there has been a decent movement on the higher end. Looking at the peer companies, also one can expect that such trend should continue on the higher end because technically, I am expecting that as it is hovering near the 200-day SMA, so if it sustains around the zone of 170, 175, this should be acting as a very strong base setup for this counter, while on the higher end, 185 to 90 is the first immediate hurdle. So once it breaches the zone of 185, then we can see that there can be a cycle of higher highs, higher lows that can be seen in this counter. For now, 165 should be the stop loss, 185 to 90 should be the target for short-term traders.
Right. So keep those stop loss and targets marked there for this particular counter. But also moving on, let's talk about HCL Tech. Now, interestingly, among the IT players, this one is seeing its CFO, that was Prateek Agarwal. He has decided to resign in order to pursue other opportunities outside of the company. But his resignation also comes with a new appointment that HCL Tech has done. This is in the form of Shiv Walia, who will be taking over as the CFO with effect from September 6, 2024. So, by the start of next month is when Shiv Walia will take charge as the CFO of HCL Tech. Remember, Shiv Walia is an old hand, one would say, in HCL Tech. He started his professional career right there in 1993, and he's been with HCL Tech at various positions and various roles, and was over the last 3 decades. So he is an old hand there that will continue, to lead from the front, now becoming the CFO from September 6 onwards. Now, Morgan Stanley, though, has put out a call on HCL Tech and this whole change in management. They still remain overweight with a target of 1,705 rupees per share for HCL Tech. They do say that the departure comes as a negative surprise. Of course, whenever there is this high level, rejig of sorts that happens, it does hit these companies with that negative bit. Although they do say that the likes of an HCL Tech compared to its peers also is generally seen quite a low level of attrition, among the senior management level at least. So that one for this company, this change of guard might not really change much. The counter do seeing some bit of pressure, we could say, at this point, but a new CFO is already in place. So you have Shiv Walia, who will be taking the reins from Prateek Agarwal. Let me go back to Osho and get a couple more queries answered. Then Osho, Ashwin Balaji wants to know your view on Tata Technology shares. He says they've been quite stagnant for some time. Would it be wise to consider exiting at this point? Tata Technologies, we saw that bumper IPO. After that, it went into a full correction mode at some point, and now pretty much stagnant, or in that particular range. So what would you suggest? Is it a good time to be exiting the likes of a Tata Technology?
See, overall, looking at the technical perspective, this counter has been into the cycle of lower lows, lower highs formation, and there has been no trend reversal kind of a signal in the short term perspective, because technically we do not have much of the data because it has been recently placed. So there has been no 200 days for this counter. But again, looking at the overall trend, the trend seems to be on a quiet note, on a lower note. But I expect that from here onwards, once the counter breaches the zone of 1030, then we can see some kind of a strong reversal in this counter. So if one is having a position, I would recommend to hold onto the position with a stop loss of 975, while on the higher end, a traction can be seen in this counter once it breaches the zone of 1030. So for short term perspective only, stay invested in this counter with 970.75 kind of a stop loss.
Right. Well, let's also look at the broader perspective. Today, we've seen some swing even in crude oil prices, a 3% cut coming overnight for Brent crude, now trading, much below that $80 a barrel. But among the counters that we're seeing the likes of a BPCL among your top gainers. But on the other side, you're seeing the likes of an ONGC that has come under some bit of pressure. So these may be stock selective, picks that one could take. But if you look at BPCL per se, Citi has put out a report on it. They have a buy call with a target price of 380 rupees per share. They do acknowledge the fact that OMCs have been underperforming in the last 6 months, and the underperformance is due to those soft GRMs that we've seen, as well as the weak marketing margins so far in the quarters gone by. And all of these factors have resulted in that underperformance, which are now suddenly seeing a reversal, is what they say. So which is why they are looking at positives within the oil and gas space, and which is why also BPCL, they have initiated this buy call on BPCL. So that stock of course in the positive, but like I was pointing out, a couple of others that are languishing behind. Osho, how are you looking at this space, and do you have any particular picks within the oil and energy space?
See, overall, this space has started gaining a strong traction. Looking at the charts of BPCL or Hind Petrol, the counter have started gaining traction. Specifically, if I have to say for BPCL, then BPCL has seen a very strong consolidation breakout in the at the very initiation of August month. There has been the first breakout, multi-week breakout that was seen around the zone of 320.25. And from there onwards, looking at the formation, I am expecting that on the higher end, 370 to 75 is the immediate target based on the technical setup. So this counter looks very positive. Even the other counters like ONGC, Hind Petro, all these counters looks positive, but do not have very aggressive targets for these counters. And I am expecting that there can be a gradual up movement. It should not be like for a day there can be 5 or 8% kind of a move that can be seen. But over short to medium term time frame, one should definitely get decent return in these counters.
Interesting. A couple more queries coming in. Jiffin wants to know your view on SBI cards.
SBI card, looking at the technical setup, this counter has been one of the underperformer, because from the zone of approximately 920 odd levels, this counter has been struggling to sustain on the higher end. Still now also there has been a strong lackluster movement that can be seen in this counter. So I'm expecting that until it breaches the 200-day SMA, which is placed around 725 odd levels, there can be some kind of sideways movement that can be seen. So if one does not have any position, wait for a decisive breakthrough above 725, 730 odd levels. If one is holding the position, better to stay invested with a stop loss placed below 685.
Quite interesting. And now another counter that can, see some good traction will perhaps be Polycabs. This after UBS again has initiated a buy call on Polycabs with a target of 8,550. Now, if you look at where it's currently trading and this call, it seems like quite a good upside that they are putting in for the counter. They do say that the cyclical, this looks like a cyclical growth champion and would benefit from that long-term electrification growth that the country is, aiming towards. It does have the highest investment in the growth levered business model among its peers, and also the significant room for growth among its TAM revenue. Now, they also see better than expected domestic volumes growth in the near term to be that near-term trigger, and which is why they've initiated that call of, with a target price of 8,550, whereas currently it's trading at somewhere around 6,770 odd levels. That counter is seeing some good upswings today, but overall, is this a good time to be entering the likes of a Polycab? Would you suggest that, Osho?
See, overall, this counter is making a formation of symmetrical triangle. So obviously, we are expecting that the support base is moving upwards. Immediately, 6,450, 6,500 is the support zone on immediate basis for short-term perspective. And on the higher end, I am expecting the resistance is around the zone of 68.50, 68.20 odd level. So the time it gives a decisive breakthrough above 68.20, 50 odd levels, then from there onwards, we can see a very strong movement in this counter, and it might retest its 52-week high of 7,200 odd levels. So overall, this counter looks very positive on the base of a technical front. So one should definitely try to gauge momentum the time it breaches the zone of 6820 on a closing basis.
Right. There's another query. In fact, two of them asking on RVNL. So maybe we'll look up those charts and what the RVNL stock really is suggesting. It is down by about 1.2% right now in trade. But how should one be looking at RVNL? And also, if there are other alternatives within a railway stocks, if one needs to choose, what would you suggest?
See, overall, RVNL is into a time-wise corrective phase right now because from the zone of near about 650, 645 odd levels, the counter have not declined much. There has been not very strong corrective in terms of level specific trend, but the technical parameters have definitely seen a decent cool off from the high zone towards a comfortable odd levels. So I'm expecting that such kind of consolidation should be there in the railway counters, specifically after the strong vertical move in the recent period. So I expect such kind of consolidation should be considered healthy and should provide buying opportunity. But again, not very much aggressive on the target for short term. But on a medium term time frame, there will be definitely a gradual up movement that can be seen. On immediate basis, the strong support lies around the zone of 510, 520 odd levels, while on the higher end, 600 is the immediate hurdle. The time it surpasses the zone of 600 on a decisive manner, then we can expect another 80 point of rally in this count.
Right, quite interesting there, this counter. But Osho, are there any specific stocks that are on your radar or something that you are liking, or any space that is looking quite interesting right now that you would want to recommend for our viewers?
See, there are two counters. One is breakout counter. The other one has been a reversal kind of a counter. The first one was ICICI General Insurance, which I thought to recommend at the very early trade, but it has already moved approximately 2% higher in the 15-20 minutes, but still it is looking very positive. One should wait for any kind of correction towards 2020 odd levels. If any correction comes around the zone of 2020, another 30 points from here, then one should definitely try to accumulate this counter, keeping a stop loss of 1960, and on the higher end 2120 should be the first target that one can expect from ICICI General Insurance. The other counter which is looking very positive to me is NTPC. NTPC have seen a very strong movement, and after that it has even corrected a decent level, a decent zone, and has started moving on the from and has taken support from the 21-day exponential moving average, and have started moving on the higher end once again. So NTPC should be the other counter that one should try to gauge even at current levels for the higher targets of nearly 420, 422, and keeping a stop loss of 392.
Right, so interesting picks. ICICI General Insurance as well as NTPC is what Osho is recommending for our viewers today. But let me thank Osho for helping our viewers with their queries and also helping us understand this kind of market environment that we're trading in, and what we could be looking forward to. Thank you so much, Osho Krishan there of Angel One, for speaking with us here at Moneycontrol. But if you're looking at markets right now, they are quite flat or in that range itself. We would say nothing much changing for the Nifty 50. It is around those similar levels that it was at yesterday, or just about 50, 60 odd points that it is taking. The Sensex also seeing, we saw that 200 points at the start of trade, but now some bit of pressure still trickling in there. Even the Bank Nifty is around those 50,500 levels. But in terms of the IPOs that are coming and the action in the primary market, well, we are going to see the likes of an Orient Technologies opening up for subscription today. But among the listings today from the main board section, you're going to see a Saraswati Sari Depot that will be listing, and from the SME segment, there's the likes of Sunlight Recycling Industries as well as Positron in Energy. Those are the two counters from the SME IPOs that are opening up, whereas Saraswati Sari Depot from the main board segment. So there is quite a lot of traction that you're seeing even within the primary markets, whether this one will see this kind of listing. The grey market premium for this one is showing somewhere around 30%. We'll have to wait and see whether it does get that kind of listings. But quite interesting that we're seeing trade within that range bound manner. If we're waiting to see whether Nifty will will get past to those 24,700 levels. There are no big events as such or big positive triggers for the market to take direction, but we are waiting for there will be the Fed minutes that will come out later on Wednesday. So for us, we'll get that action on Thursday, but there's also the Jackson Hole Symposium where most of your central bankers meet, and we're going to be hearing Jerome Powell also speak there. So we will get some kind of indication whether that September rate cut that we're talking about is likely to happen, and how much, or whether it will just be 25 basis point or more is something that we've been seeing a lot of people putting out their opinions on. So we'll be getting you more of those details. But for now, it's a wrap and a goodbye from the entire team that puts this piece together. Thanks so much for tuning in. Do send us your feedback in the comment section below, and also keep writing to us on the live stream. So we'll have have our experts answer those queries for you. But for now, it's a goodbye, and I'll be back here again tomorrow for all your other updates. Come right here to moneycontrol.com as well as the Money Control app. I'll be back again tomorrow.